You're watching Wall Street Confidential. Welcome, I'm Farnoosh Torabi with my guest, as always, Jim Cramer. Hi, Jim.
How are you?
Let's talk about gold.
Right.
Yemen, blowout numbers, but the price of gold is dropping. People feeling the dollar's bottomed, quite frankly. So why invest in gold?
I think the dollar could bottom short term, and the reason why it could bottom is because everybody else has to cut interest rates. Longer term, I don't think the dollar can bottom. I think it can trade in a range to lower because we keep printing dollars because the crisis isn't over. Two people I don't trust, I trust the least, are John Thain and Hank Paulson. They're saying the crisis is over. Those guys have cost you a fortune. Gold is in the sweet spot because everybody hates it. The stocks have come down a lot, and there is no sense in staying away from this fabulous asset when the world is reflating. I mean, we had this deflationary environment, which is that the bonds are being crushed, our houses are being crushed. The only reaction to that is you got to reflate, you got to print money. Anytime we've ever been in a reflationary environment, the number one asset to own is gold. I've been buying Yamana, issued a actionalertsplus.com bulletin last night, saying that, look, this is the company that's been punished the most. It went from 19 to 12. It missed its quarter. Why did it miss its quarter? It made a very aggressive acquisition of Meridian. It took its eye off the ball. Peter Maroney, who's the CEO, has been the greatest operator in the business, but obviously when you have a really contentious M&A effort, it takes your eye off. Now they've got the best assets. They've got the lowest finding costs. They have a tremendous copper byproduct. This is the only growth gold stock other than Agnico Eagle. I like it more than Agnico Eagle because Agnico Eagle can one day buy Yamana. So you got this great combination of the need to reflate, gold stocks all the way down and gold all the way down, and a growth gold stock. I'm telling people who get actionalertsplus.com, and we've had, we had some troubles, but we had some pretty hot hand lately. This is it. Mm-hmm. This is it. Get on. I don't care that it's a 14.
What do you say to investors who prefer the ETFs?
Look, one of the things that we've learned, and I did a really interesting video yesterday with Patrick Schultz, the commissioner of the Beat the Street game, is that the ETFs have been a failed strategy, and he's out there on the field. He's got boots on the ground. It's very clear that the ETFs has just been nowhere near as good as doing your own work. ETFs are something that have been created by Wall Street in order to generate more commissions and more IPOs. That's okay. That's what Wall Street does. Don't take your cue. They're not doing it for you. They're doing it for them.
All right. Thanks so much, Jim Cramer, on gold. This is Wall Street Confidential. Please stay tuned.